I'm joined now by Alan Brochstein, publisher and proprietor of 420 Invest. Alan, welcome.
Hey, it's good to be back, James.
Alan, since we last spoke a week ago, the cannabis market has not really improved at all, but not really worsened at all. And, you know, there's been a few eyebrow-raising events that have happened that more or less just go to affirm that the siege under which the cannabis sector generally finds itself continues at this point unabated. What's the outlook from Houston, Texas?
I got to say, we're never short on drama, that's for sure. And I continue to stick to my thesis that, you know, we're probably near a bottom. Literally, the bottom is a little bit lower than I thought in terms of the price. We're a little bit lower than mid-October's bounce. And I really thought the lows would be set then. And here we are 3 weeks later, kind of testing those lows. One interesting divergence I'm seeing is the larger LPs have not made new lows. We're talking about like the Canopy Growths, Auroras, Afrias, Tilray, Organogram. So if you look at those, they've held their lows, while the rest of the Canadian sector is being thrown out, which is interesting. But that's a whole nother topic. But we're moving into what I think is the most important earnings season the sector's ever faced. And there's a lot of doubt out there about the ongoing concerns of these companies. You know, we saw Dionamed Brands go into receivership. I think that's the first public company to do so. And there are a lot of companies out there that are short for cash, and it's nice to see some success stories. I think Tilt Holdings was had a gun against its head, and it managed to duck for now anyway. So I don't think it's as bad as people fear, but this earnings season is really going to help investors either get confident with certain names or give up on certain names, I would say. And the large LPs are really at a crossroads here. The valuations, fortunately, have come down a lot, so that's less of an argument at this point. But the outlook in Canada seems to be muted until we see some Ontario stores. So we'll hear a week from today, actually, from the two largest companies, Canopy Growth and Aurora. And you know, obviously, Aurora last quarter didn't quite hit their target of EBITDA break even, and there's some questions about $20 million of wholesale revenue. But we'll get a chance to see where they are now. And I think the more important call is going to be Canopy. Some people think they may announce their new CEO. If not, they'll probably give some insight on that. And I think that's going to be a very important event for the market to kind of see not only who it is and but also what their plans might be. There are a lot of companies out there in the Canopy ecosystem, and they've all been trading weekly. I think there's concern, you know, with the acreages and with the Canopy Rivers and companies like that, just with the change at the top. So I think it'll be interesting at a minimum to see what happens, and hopefully there'll be some relief. But there's a lot more than that, James, a lot going on.
Sure. I find it interesting that the entire sector has been revalued to the downside by anywhere from 50 to 80%, depending on who we're talking about. And as you say, the great bifurcation seems to be underway, where Canada, who is clearly plagued by an excessive production going into these next quarters and the next years, and then also in the midst of a national price war catalyzed by Hexo reducing their price to black level pricing levels. So from the Canadian sense, the outlook is not good at all. I juxtapose that with the U.S. outlook, where incrementally, state by state, county by county, there's more and more consumption. Yes, there is a great deal of supply, but the trade war aspect is limited by the intrastate border reality that causes the U.S. to really act as, you know, 52 different nations that just happen to be neighbors. And so do you concur with the idea that going into 2020, 2021, you know, Canada's really already oversupplied, there's too many participants, there are no barriers across provinces, so it's a free-for-all, whereas in the U.S., there's a brighter future because enforcement is going to become more of a factor in the diminishing supply from the black market. And we both know that enforcement in the US is a lot different than enforcement in Canada. Enforcement in Canada
it's not so great. It's terrible in Canada, but it's not so great in the United States. But
well,
yes.
I mean, from the implications when enforcement really kicks in. In Canada, when enforcement kicks in, like we've had enforcement kick in with these illegal dispensaries where the cops have shut them down and they're open an hour later, and
Right.
so they put giant cement blocks in front of these establishments, and the guys just show up anyways and start slinging weed from out front. Whereas in the
Yep.
U.S., enforcement, when it comes to bear on the illegal market in all of that means from the federal level, that comes with a lot more serious implications to one's personal freedom in the United States than it tends to in Canada. And that's why I think going forward, the sort of strangulation of the black market, which is in some degree at the core of the whole argument for legalization, is going to come to bear in the United States, which is going to be a boon for licensed producers. So the real bifurcation that's happening is Canada's a write-off for the near term, and the United States has a lot more going for it, especially with these multi-state MSOs.
Yep. So let me just take a slightly different tack. I think you're being overly pessimistic about Canada, but I'm going to stick with your point. I think the U.S., I said this a year ago, it hasn't really played out. I think the U.S., for some of the points you mentioned, is a more ripe investment ground. And, this is not a reason to trade the stocks or to get excited today, but next year should be another great year. And I think we're going to see a few things. First of all, in California, that's been pretty much a disaster, and it parallels Canada. There's been very little enforcement, but there's a big change that's about to happen, and I've been irate over this. Weed Maps has been helping the black market. And look, the best way to beat the black market is to have high-quality products at a good price and to explain to the customers why they should buy them. That's the real answer, but it doesn't help when you have Weed Maps helping these illicit companies advertise. That's going to end I believe January 1st is what they said. So California, bigger than Canada, or similar size market as Canada, maybe slightly bigger. Been very slow to develop. Everybody's kind of missed their expectations there because of the illicit market strength. But that should turn, and that's going to help some companies. And I think what it's really going to do is help a lot of the private companies. Where I think some of the MSOs would like to be bigger in California, but absent some signs that the market's turned, they're slow. They're reluctant to do so. So that's one thing. Two, it got delayed, but Michigan is going to be a great market. That'll be early in 2020. And even better, I think, Illinois, just fantastic. And there's some publicly traded companies that are in that market. The way they set that up is very favorable to the incumbents that have the medical licenses there. So I think that's going to be a positive. I think the other thing that it's really easy to look at a lot of companies and say, well, these guys don't have money, they're not going to make it. And they'll probably make it, it's just they're going to dilute the heck out of their shareholders. But at the same time, there's some companies out there that have much better financials and better access to capital, and they're probably going to grow just as much as they would have before. So overall, some of the companies may not grow quite as fast, but in this quote unquote horrible year where all these stocks are down, the growth is pretty impressive. And I think the industry needs to do a better job still on managing cash, given the cash crunch that's out there right now, which probably means slower growth, but still growth, James. Mm-hmm.
Okay, so you seem a little bit more optimistic than I do, for sure. Do you think that the reason that I'm more bearish on the Canadian sector is because I think that everything that I'm reading online indicates that the recreational audience is very much uptaking Hexo's discounted marijuana because the quality remains as good as anything else out there in terms of both potency and the other qualitative aspects. And so there's some real uptake in that discount marijuana, which I think is going to eat directly into the performance of the other companies in the ensuing quarters. And so that's why I think I look at the projections of these numbers and I think, oh, that's not taking into account the hexo effect, as I now like to call it. And the secondary thing is that we're now approaching 3 million kilograms of capacity in 2020 with 1 million kilograms of demand. And so that's just a bad metric.
So I think the disconnect between our views is that the Canadian market is very big, but it's served more by the illicit market than the LPs. And so you're worried about hexo competing with LPs when they're all trying to compete with the illicit market. And the government of Canada and the provincial governments have done pretty much everything they can to handicap the LPs, it seems. Most recently, Quebec raising the age, for instance, to 21. So I think what we're going to see next year is the solution to the number one problem, that there aren't enough stores in Ontario. And, if that doesn't happen, I'm wrong. There has to be more stores. And I know that they're increasing, but that will be a major boost. Right now, if you're a consumer, you can go to a crappy website and order something you don't understand, or you can go hunt down one of the very few stores. You may have to drive an hour or something like that. So that's part. And I think also, if you look in the United States, flower is roughly 45 to 55% of any market. And unfortunately in Canada, it's been pretty much the whole thing because that's the pre-rolls and the flower are really the main things that they have. And that's going to change, obviously, next year. And if they don't have stores, it's not such a big deal. They need to get the stores. But those two hand in hand, I think, are going to really help, James. And, I think the black market or the illicit market, it's really easy to compete on flower, especially I think the quality is probably better in the illicit market and, delivery and all that other stuff. But some of these new products may appeal to customers. I'm not very high on beverages necessarily. I know a few companies are very prominent in their efforts there, but I think edibles are going to do real well. And it's unfortunate that at least initially the rules are a little bit too conservative, 10 milligram maximum per package, which is very different from the United States. It's like 50 in Oregon to 100 in most other states. So I think that's a little bit of a deterrent, but the novelty effect for some of these beverages and vape pens and edibles is going to be great. And I don't think there's any constraints on the vape pens. They're going to match the illicit market very well.
Mm-hmm. Mm-hmm. All right, Alan. Well, that's a fantastic contribution. As usual, I look forward to talking to you again next week. Thank you very much for joining me.
All right, take care. Stay warm, James.
Thanks.